Greetings, Algo artisans. End of the week, we're going to take a look at Bitcoin. We're going to take a look at USDJPY. We're going to take a look at the SP500. So let's jump into the charts right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so we're going to start with Bitcoin. Here it is. And just a reminder, this week, next week, and part of the week after, I'm going to be on light duty. It's not going to be videos like these every single day. I will do my live show every day, and I will do Algo Factory every day. That's every weekday. However, for the moment, I will not be doing these videos every single day. However, if there is a video that you want, please feel free to comment in the YouTube comment section, and I may be able to oblige with some kind of requests. Okay, so here we are with Bitcoin, and we're taking a look at this consolidation that we've been tracking for months going back to March. Price is still in this area. Price did not break out. I did think it was possible for price to break out back early in June, about on the 5th, roughly in that period, and it did not break out. It rejected, and now it's headed back down towards 60,000. So let me go ahead and get rid of some of these liquidity levels. This trade that I mapped out, that was a potential trade I was looking at this morning based on liquidity at the time. So if that liquidity is still there, I may well still take that trade. And to look at this a little bit deeper, this is a very clear downtrend. Lower highs, lower lows, continuing down. Algos go along with this. So I was expecting this morning a bounce upward to about this area here where I might be interested in taking a short. And that was based on the algos, based on liquidity and the charts and everything. So let's see if that thesis is still one that is valid according to my rules. First, we're going to jump over to the Kingfisher, and here is the liquidity. And a lot of liquidity is built above price, which means that there is a decent chance that price will head up to that area, which is going to be mostly from 65,500 all the way up to about 67,000. So 65.5 to 67,000 is roughly here to about there. I'm going to code this yellow to make it easier to see, and now price is probably going to want to rally up to this and grab liquidity. Now, in order for that to happen, the price action and or the algos do need to favor a move up. So I'm going to take a brief look right now at my algo screen. Price is actually pretty bearish on the daily, but it is at a point where it could break upwards at least temporarily. Let me take a brief look at the weekly. Now, of course, weekly algo screen is going to be relatively unchanged from this morning. These move very slow, and price does want to head down, which is why I have these lower liquidity areas mapped out from this morning where price may go. And those are sitting at 58.8, 56.6, and 53.2. So let's go back to the Kingfisher and see if those are still valid. 56.7 to 56. We have another spot here from 53.7 to the top side to 52.7, very similar to what we saw this morning. And given that I trade level by level, I'll probably just not worry about liquidity that's below that for the moment. Price can always go down further. However, you see here this block back here where there was a consolidation on the way up, that does correspond with the liquidation that we see here. So we can, for the moment, probably have this as our low side liquidity here. And then earlier we did have a lot of liquidity around 59,000, but now compared to 59,000, this area down at 56.5 is much, much bigger, but it is still there at 59,000. There's still liquidity to be had. So we have downside and upside mapped out. We have the algos wanting to head down. However, there is that possibility that price could reverse to the upside. So let's drop to the 3-hour time frame and see if that little trade that I mapped out still looks feasible. Okay, brief look at the algo screen does have the possibility of a move upward, at least temporarily. So this, what I've drawn here, does seem like it could happen. And as a matter of fact, it seems like it's already possibly started, where price has now stopped falling over the last several hours and is consolidating in this area. So there's a decent chance that price could, after this consolidation, break to the upside. It could really go either way, but it could break to the upside, which would fit the pattern for what has been happening on the way down, where you overall have lower highs, lower lows. So this could, again, bounce up, grab liquidity from what we now know is there, anywhere in this area, and then head down after that. So that being the case, I might have my trade look a little bit more like this. And again, there's not a ton of liquidity like there was earlier this morning at this 58,000. And either way, if you remember from the morning show, I probably would still stop the trade before it got below this high time frame consolidation bottom, which is roughly around 60,000. You're still looking at a 4-to-1 trade if the stop loss looks like this. And again, this could be different. We might see price goes a little bit higher and I can enter higher and the stop can change. I mean, this is a basic idea of what this trade is. So I wouldn't look at these numbers as gospel. We're just building a thesis, and then as the price action forms up, I can make a better look at this. Now we're going to move over to the USDJPY right now. So let's take a quick look at that. The USDJPY has been powering upwards. We have been covering this at Algo Factory for quite some time. A better part of a year, if not longer. So if I go to a weekly chart, we can see how price broke above 152. 152 was a very important level going back to 2022. You see price came up against 152 a few times, where that yellow line is right there. So let's delete some of this data here, and we can see that 152 was the top of what became a bullish ascending triangle. And that being the case, I could use this prior extension to map out some targets to the upside. So this hard move up here could be treated as one large extension, on top of which I would impose a Fibonacci tool. And that would give us targets based on that Fibonacci tool at about 162.2 and 175.56. And without getting into the whole, macroeconomics, geopolitics, so on and so forth, there appears to be basically a currency war happening. You can just go back and watch the USDJPY videos from the couple of weeks before, but the long story short is that the Japanese yen has been a liquidity solution, and there's been a massive carry trade going on for, probably decades, but very clearly going on the past several years, where Japan has had very low interest rates, and that has allowed for the stock market to have basically, and I mean the US stock market as well as others, to have what is basically a pressure relief valve. And Japan no longer wants to play that game. And they seem to be moving into an area where they're going to have their population's own best interest, right? So they're going to probably step in and defend the yen, and they did try to do that. What they did was they positioned themselves to be able to do that. And when they did, price went ahead and broke above this area. And it seems that it might be other players are weakening the yen. It might be a few things happening. Either way, though, the targets I would have are at those levels. So at the moment, this thing is just barreling up. So on a lower time frame, what I probably would do is just keep looking for pullbacks. There's a certain kind of pullback trade that we do at Algo Factory when everything is in FOMO mode, and I would continue to have my fib tool out, and every time price pulled back, I would look for possible moves up. Be as simple as that. Price is headed up, pulls back. We do that special formula for what kind of pullback we're looking for, go long, and there we have it. Now again, there will be a time when this probably stops being quite as bullish. 160 yen to the dollar is psychological, so we might actually see price calm down around that time, or not. It might just simply break through. However, I think any kind of longs going up to 160 might be pretty valuable, and we're getting there. But I will tell you, if price breaks above 160, then there's a really good chance that some longs taken after that all the way up to 170 might look really solid. And again, we do have our fib target sitting at 162. So perhaps a break above 160, whatever that next pullback is, even if it's not 160, I might take a look at a long such as this and run targets all the way up, even to this top target at 175. But you're talking at that point about a very long high time frame trade, which is not how I do things. But if price does continue up like this on this kind of time frame, there's a good chance I will look for pullbacks and continue to hit longs. Right? And that would take maybe a day or two of trading like that, and I could pull in several trades. So this is what I'm looking at for the USDJPY. Let's look at the SP500. So SP500 making new highs, breaking records, and doing it several weeks out of this year. SP500 broke its all-time high right here in December of 23 and has pretty much been going up ever since. So what are the targets? Where might price go in the S&P as it rises? Well, for one thing, we don't have any old data. It's at all-time highs, basically. So there's no old data I can look at for market structure. So I have to rely on tools such as Fibonacci. So what I'm going to do is I'm going to apply the Fibonacci tool to the most recent extension, this impulse right here, and that'll give us some upside targets. And price is almost to one of those targets here at 56.60 or so. And the next target up would be at about 6,000. The 618 is just above that, but I probably would take profit right below 6,000 because that is a psychologically important number. Given this is on the weekly chart, this might take several weeks to happen. Even at this very strong trajectory, there's a good chance there will be some kind of pullback and then on the way up. And then again, there might not be. It does seem that the stonk must be protected at all costs right now, and there is a lot going on behind the scenes to keep the stocks going up. As I have been saying for months and months and months, this is an election year. So there's a really good chance stocks will continue to go up, but we'll see these quick few week-long pullbacks and then price rockets up again. Through the rest of the year, I doubt there will be any major changes in policy that would cause the stock market to fall. There's always that chance we see a black swan event, some kind of event that causes the market to fall. It's possible, but I think that the most powerful people out there will try to keep any of that from happening as much as they possibly can through the election, because the incumbent needs to have markets being good. People tend to vote with their wallets. So I would go ahead and be interested in a 5660 target, as well as about a 6,000 point S&P target. All right, so these are the charts. We'll take a brief look at the calendar for next week. Okay, so Monday, June 24th, we have Bank of Canada news, BOC governor talking, more Canadian news early the next day, and that's going to be CPI, a lot of inflationary data. Consumer confidence for the U.S. at 9 a.m. EST on Tuesday. That's probably going to push price around a fair amount. No big news on Wednesday. We have British Central Bank governor talking, Governor Bailey. He's going to talk, and that'll push markets around. Thursday is unemployment claims, and even though that's a week-over-week metric, we still could see a significant move if those are way off target. Also, we have final GDP quarter-over-quarter, and that is going to possibly be strong. Again, if it's dead on the nose, markets might move because money's coming back into the market, so it might just be money on the sidelines coming back in. But if it's not on the estimate, if the actual numbers are different than the forecast, then yes, this could be a very strong effect on the market, a nice market shock. Pending home sales, that right now, I know that new home starts are at an all-time low, so that's going to be an interesting look. And again, that's 9 a.m. EST on Thursday. So a lot of news coming out early on Thursday. Some at 7:30, some at 9 EST. And then we have on Friday some inflation data coming out along with Canadian GDP. So 7:30 EST, that's going to be some pretty strong news possibly. We'll see about that. And then more data coming up for consumer sentiment at 9 a.m. EST. So keep an eye on that calendar. Remember how I do things. I tend not to trade during those news events. I tend to let those play out and then take advantage of the volatility after. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey, Cowboy V, I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 Great Financial Crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
Don't forget algofactory.tech, trade your job, upgrade your life, and we'll see you on the next one.